I have a really exciting trade recap video for you guys today, and I want to stress the importance in this video of looking at market dynamics and, more importantly, stop loss placement and target placement, where you should be looking to put your stop loss and where you should be looking to take your profits. When it comes to entries, entry is very important, and I'm going to explain that in this video, but it all kind of ties together. I want to give you guys some really cool tips and tricks on how you can increase your win rate, avoid getting stopped out multiple times in a very strong trend. In this video, we're going to be using a bullish trend as an example, and just go over the basics of price dynamics and price action and how to find these really cool trends to find key significant areas. Let's get into the charts and get right into it. So this is the trade I took on CHF JPY. I took the trade on Tuesday, and I took the trade on the 5-minute time frame. I do my analysis on the 15-minute to avoid most of the noise that lower time frames offer. And one thing I will mention in this video, I am going to be focusing more on 15-minute A2 signals rather than 5-minute A2 signals. 15-minute A2 signals, and I'm going to show you this in a minute, give you a much better price if price is still making its move down. On the pullback, we usually see price move down. On the 5-minute, you're going to get multiple A2 signals. You'll see that in a second as well. On the 15-minute, you're only going to get 1, 2, maybe 3 signals, but they are at a much better price because they have to retrace further in a bullish trend here to print that A2 signal. I'm just going to turn off the indicators right now, and I want to go over market dynamics and price action. What you see on the screen here is my analysis when I got to the desk. And I'm going to draw your attention to SP, which simply references starting point. The way I find my starting point, guys, is I find an area of consolidation where price just moves sideways. And then I look for a breakout, which we had just over here. All right, so that was the breakout. I then wait for price to retest the lowest low of that consolidation period, which we had here. So how I find my initial starting point is going to the low of the consolidation period, and I simply draw a line, and if price respects that, it's structure respected. And what I mean by structure respected, a candle did not close below that area. We only wicked it with this massive rejection wick, and then we went up and created newer highs. So we had the higher high here, and then we had a new higher high breaking structure. All right, so I'll just paste this over here. And what happens is, simple market dynamics, price creates higher highs, higher lows. That is the underlying condition we need for a bullish trend. With all the higher time frames in alignment, using this indicator, I'll put the link in the bottom of this video as well if you want to go check it out. It is publicly available with the script. But getting on with basic price dynamics here, price is making higher highs and respecting structure. It makes its higher high here, breaks this level, creating a new higher high. We get that pullback, we test the higher low. We reject off it, using it as support, create a new higher high. Price then comes back, tests the higher low over here, breaks the higher high, and then creates a new higher high. This is the underlying condition of a bullish trend. When I got to my trading desk, at this point, price has already made a new higher high, breaking above this previous high here. And as a trend continuation trader, I want to wait for a pullback to get involved on the next extension up. This is where I really want to stress the importance of profit taking and where to place your stop loss. I took the entry on the 5-minute time frame. So if I bring on the A2 signal here and jump to the 5-minute time frame, you'll see my entry. There were multiple different entries we could have got involved in. And this is what I was talking about earlier in the video, where I want to really start looking at the 15-minute time frame, because trading the 5-minute, you're going to get multiple signals. Getting the 15-minute, you're going to get that deeper retracement, giving you a better entry point, which means you're going to get a better profit taking level, and you're going to capture more of the move if we see an extension. Naturally, I took the first signal that presented because I didn't want price to kind of run without me. But on the 5-minute time frame, you can kind of wait, because look what happens. I took the entry, and mind you, I got involved a little bit later in this as well. So I didn't get the perfect entry, and I was targeting obviously 1R with my stop loss over here. As you guys can see, aiming for 1R here is above the high of day. High of day is a very significant level. So is yesterday's high and low, Asia session high and low, but high of day kind of really screams at me because we need buyers to break this level and create a new high. And you're gonna need a lot of volume to do that. Having targets within this structure zone, targeting structure highs and getting 1R to that level would have been the better option and how I want to take trades going further and how I encourage every trader to do so as well. If I was to do that, my stop loss would have to be even tighter and I would have got stopped out on my position. Now, coming back to the 15-minute time frame, I want to show you the signal we got on the 15-minute, the A2 signal we got in the 15-minute. Now, using the default stop loss from high to where the entry presented, you can see it's a bigger stop loss, correct? Stop loss over here, getting 0.6 R to structure highs. And what I mean by structure high, guys, is the highest candle wick using that candle's body is the structure high in this case. So you can see this candle had the highest wick of the day. I want to use open of this body in this case. I want to use that candle as my structure highs and my profit level. So keeping the original profit level, we're not going to change that. The only thing we're going to change is our stop loss. Now our stop loss is lower, but so is our entry point. If we enter on the close of this candle, let's even add in a few pips worth of spread. So we're getting in at that point there. We are getting 1 R to structure highs. This is a much better trade in my opinion than taking the 5-minute entry. And I never saw this entry present because I was so focused on the 5-minute and all the entries it was printing, and also because I was already involved in a trade. So I was managing the trade on the 5-minute. Coming back to the 5-minute time frame, you can see how that looks on the 5-minute. If I was to take any of these B signal A2s, they would all be at a worse off price than taking the 15-minute A2. If I got involved on the first one, which I did, and I did get in late, the first one printed here, I didn't get in until about up here. The second signal presented on this candle here, so I would have been in at that point. The third signal printed on this candle there, so I would have been in over here. So you can see the importance of the 15-minute and why I am leaning more towards trading the 15-minute A2s rather than the 5 minutes. Now, I'm not saying the 5 minutes aren't profitable because you can get some really good 5-minute A2 signals, but you're just going to require a little bit more patience and just don't jump into the first signal you see present. Wait for price to kind of do its thing, let the trade come to you and have a bit more patience. On the 15-minute time frame, that's exactly what you're doing. You're just waiting for a 15-minute bar to close instead of a 5-minute bar. Now you can see the correlation between the profit levels, your entry, and your stop loss. Even though your stop loss is way further down, so is your entry point. And the better entry you get, the more success you're going to have with getting your profit levels hit. I've explained this concept in many other videos, but I just want to bring your attention to this really quickly again. Now, when you're looking at a bullish trend, I'm going to use this as an example since that's the trade I'm doing a recap on. You have two significant levels. You have your major zones and your minor zones. When you're looking at significant levels, they are where I encourage you guys to look for entries and also to place your stop loss below those levels. So these are your major levels here, where price is making higher highs. You have your pullback, higher low. You break your higher high, making new higher highs. Price comes back, tests that previous higher high, and then creates higher highs. That is the underlying conditions we need for a bullish trend. Your minor levels are simply what happens within the overall structure. Okay? Now, you can trade these minor levels, but just understand you're going to get stopped out more often than not when trading them, because this is what usually happens. So to give you guys a reference on this, major level, major level, major level. So your higher highs and higher lows are your major key levels that you want to be focusing on majority of the time. And how I would use this to your advantage, if you saw price action setting up like this, to put success in your favor and put probabilities in your favor, if price came down and you had the tiniest of retracements and you were to enter there, and you wanted to, once again, take profits at high of day, this would be your scenario, okay? I would encourage every trader, 9 times out of 10, to do something like this. Not the target part, but the stop loss placement. You want to put your stop loss way under your major zones. I forgot to draw a major zone here, sorry guys. That's a major zone as well, because that is a higher low. So your higher highs and your higher lows are your major significant levels. So I've just marked it up with the text so you guys can see that. Now, this higher low in there, you don't know it's a higher low until the previous high has been broken. The only reason we can tell this is a higher low is because the previous higher high, which is right here, got taken out. It was broken structure. Price created new highs. So then we can classify this and identify it as a high low because we now have a higher high. Hope that makes sense. The reason I say most traders would have more success putting their stop loss way below here is because if you put your stop loss here to get 1-to-1 risk to reward ratio, price may want to naturally gravitate towards the significant level. These zones act like magnets. If I was to put my stop loss down here, once again, if it breaks this level with strong momentum, it might want to gravitate to the second high significant level, which is the higher low. If you put your stop loss below the higher low, yes, you're going to have to aim for extended targets if you were to enter on the small retracement. We'll get to that in a second. But you can anticipate, if you have an underlying bullish trend, why would you anticipate to go short and take the reversal, the counter trend, lower probability move? You are more better off taking the high trend, following the trend. The trend is your friend. Now, if you are targeting structure highs, I would never recommend just to jump into a trade on the small retracement. You want price to come back to a significant level. In this case, if price came to this level here and you got an A2 signal, I'll be more inclined to do so because this way I'm getting a much better risk to reward in my favor. If price came down a little bit lower, I can get 1-to-1 with my stop loss below the lows. But if you can build multiple confluences around this zone right here, let's say you had the 50 EMA coming through this level. So you have like a 50 EMA retest. Once again, you're adding confluence. Let's say you enjoy using the Fibonacci retracement. So you go high to low and you had a 618 or a 50% retracement, the golden zone, you had price candles rejecting that level. That is 3 key significant confluences you have in your trading now. You have structure, you have EMA retest, and now you have a fib level. If you can build out all those confluences, I can then be like, okay, maybe make your stop loss a little bit tighter. Maybe you can get 2-to-1 instead of 1-to-1. And this is all coming down to understanding market dynamics, most importantly, price action, because you want to be putting your stop loss under the biggest fundamental thing, and that is price. Using indicators and everything, we all know a lot of traders out there are using price more times than not as a significant area of confluence in their trading. Everyone's using different indicators with different settings, but price action is price action. And that is why I recommend using price action stops more times than not. But if you can build multiple confluences around a significant area, then you can get away with getting a bit of a tighter stop loss, maybe going down on a lower time frame, seeing once again price action patterns, a double top, bullish divergence, anything like that. So coming back to my trade recap on the 15-minute here, I took the trade on the 5-minute. I'll show you guys that again. So this was the trade I took in the 5-minute. All right, I had my entry on the first signal. I got in late because I wasn't paying attention. I was aiming for structure highs. I locked my stop and took 25% off as price reached that level. I ended up getting majority of my position taken off at break even. If I would have just followed the example I gave you with the demonstration, coming back to the 15-minute time frame, if I would have just had my stop loss below the low, getting rid of the A2 signals, getting rid of any entry criteria whatsoever, and just having an entry at a 50% retracement, meaning if you get your higher low and your higher high, you get your Fibonacci extension, you go from higher low to your higher high. I don't know if you guys can see that. I'll zoom in a little bit. But we have the 50% retracement. We also have a retest of the 0.618. If you were to get in, just have a market order at the 50% retracement, you would have been profitable with extended targets. You would have been up 0.6R at structure highs, and you can see the difference in your stop loss placement, having it below a significant area where you're gonna find more success, increase your win rate, and increase your probabilities of the trade ending up going in your favor. You can't ignore the significance of using support and resistance zones, supply and demand, whatever you want to call it. I encourage you guys not to overcomplicate it. I have a few videos explaining how I look for my higher highs, but if you zoom out your chart on your whatever time frame you're looking at. You can apply this to multiple different time frames and instruments and asset classes. But if you just zoom out, what is price doing? Is it breaking highs? Is it creating higher lows? Is it making lower lows, lower highs in a bearish trend? And just mark those zones out because they will be your significant levels. Have the patience to wait for price to come back to one of those levels and build out Confluence around it. EMAs, fib retracements, whatever you feel comfortable and enjoy using. And then build out an entry criteria. Here I was using the A2. The A2 is what snaps me in a position. It's what's telling me, okay, now's your time to get involved if everything else looks good. But that's as simple as you guys got to keep it. I hope you guys got some value out of this video. Hope you're all doing well. Be safe, and I'll see you all in the next video.